It's funny. You can be really careful about cutting back, skipping the coffee, right?
Mm,
Thinking you're doing all the right things with spending, but somehow the money just still seems to vanish.
yeah.
You're looking at the big stuff, the little stuff, but it feels like something's still off.
That's a really common feeling, actually. It's like,
Yeah,
you're fixing the dripping tap, but maybe there's a hidden leak somewhere else you haven't found.
exactly.
Often the biggest drains aren't the things we're actively deciding on every day. They're the costs that just keep recurring.
Yeah.
Things we've maybe stopped noticing or haven't really optimized.
Right. So for this deep dive, we've pulled together some insights on those less obvious money leaks and, more importantly, some really practical ways to maybe, plug them.
Mm.
The idea is to give everyone a shortcut sort of to understanding where the cash might be slipping away and how to get a better grip on it without having to dig through tons of research themselves. We're focusing on those tweaks, those adjustments where like a little bit of focus can actually make a pretty big difference. Really practical, actionable stuff.
Okay, so let's dive right in. A big one many people just set up once and then never think about again is car insurance.
Ah, yes. You get it sorted, maybe when you buy the car, and then that's it.
Exactly. And that inertia, just letting it ride, can actually be pretty expensive.
Yeah, the sources we looked at suggest people might be overpaying quite a bit. They mentioned Insurify, for example.
Right.
Apparently, people using it are saving, well, it says up to over $1,000 a year just by comparing.
Yeah, and what Insurify does is it basically streamlines that whole comparison shopping thing.
How so?
Well, instead of you going to like 5 different insurance websites and typing in all your details again and again,
Ugh, yeah, that's tedious.
right. With Insurify, you put in your info, once car details, driver info, and boom, they show you personalized quotes from a bunch of different companies all in one place.
And crucially, it seems like they don't then spam you with calls and emails, which is definitely a bonus.
That's what they claim, yeah. And they've got a pretty solid rating on Trustpilot, like 4.7, which suggests users are generally happy.
So spending, what, maybe 10, 15 minutes on there could potentially free up a decent chunk of change each year?
Absolutely. And beyond just comparing prices for the same coverage.
Oh, right.
It's probably worth thinking about whether the coverage you have still makes sense, like for your car's age and value and how much you actually drive.
Good point. Maybe adjusting the deductible or rethinking comprehensive if the car's getting older.
Exactly. Those can lead to savings, too. It's about periodically reassessing what you actually need.
Makes sense. Okay, so that's insurance. What about another big one that weighs people down? Debt. Specifically, credit card debt with high interest.
Ah, yes. The revolving door of high-interest debt. It can feel relentless.
Totally. The sources really highlight how credit cards become almost essential sometimes, but then managing that debt becomes the real challenge, right?
And the interest just kills you. It piles up so fast, makes it feel like you're running hard but not really getting ahead on the actual amount you owe.
Yeah.
So this is where services like National Debt Relief come into the picture. Their whole focus is helping people who have, say, $15,000 or more in unsecured debt.
Okay, so like credit cards, personal loans, medical bills, that kind of thing?
Exactly. Not mortgages or car loans, but the other stuff. And what they do is they negotiate with your creditors on your behalf.
To try and lower the total amount you actually have to pay back.
That's the goal, yeah.
Mm.
Potentially reduce the overall debt burden. And then they help set up a more manageable payment plan for that potentially reduced amount.
That could definitely take some pressure off if you're feeling swamped. But does doing that, like negotiating debt, affect your credit score?
That's a really important point.
Yeah.
Yes, engaging in debt settlement can negatively impact your credit score, at least temporarily. It's crucial to understand that trade-off before you jump in.
Okay, good to know.
National Debt Relief usually aims to get things resolved, meaning the debt settled and the new plan in place, within about 12 to 48 months. They also offer a free initial consultation.
So you can talk to them, see what they propose without committing anything up front.
Exactly. Explore the options first. Now, switching gears completely, what about actually making a bit of extra money in maybe some unexpected ways?
Oh, like what?
Well, have you ever thought about getting paid for stuff you might kind of do anyway, like watching videos online?
Watching videos for money, that sounds almost too easy. Is that real?
Well, the sources mention platforms like Inbox Dollars. That's their whole model. You watch short video clips, maybe answer some surveys too, and they pay you for it.
Huh. How much are we talking?
The figure mentioned is potential earnings of up to $225 a month.
Wow, okay. So maybe not quit your job money, but...
Definitely not. But as a way to monetize some downtime, maybe while you're commuting or just chilling, it could add up.
And they pay in actual cash, not like points you can only use for specific gift cards?
That's a key point they make, yeah. Cash payments, often via PayPal or check. They say they've paid out over $56 million total to users, which suggests it's, a legitimate operation.
And easy to sign up.
Apparently very quick.
Yeah.
And they offer like a $5 bonus just for signing up, so it's pretty low risk. Just check it out.
Interesting. Okay, let's swing back to debt for a sec. Specifically, those killer interest rates on credit cards.
Right.
Some of the examples mention rates as high as, what, 36%?
Yeah, it can get incredibly high. It really does feel like you're just pouring money down the drain on interest when rates are like that.
Totally. That APR, the annual percentage rate, it just means so much of your payment isn't even touching the principal, the actual money you borrowed.
Exactly. It makes escaping that debt cycle feel almost impossible sometimes. It's just so costly.
So what's the potential solution here?
Well, another approach mentioned is using a service like MLONE. They aren't a lender themselves, but they connect people with options for low-interest personal loans.
Okay, so the idea is you get a personal loan with a lower interest rate.
Right, hopefully significantly lower.
And use that money to pay off all your high-interest credit cards.
Precisely. You consolidate multiple high-interest debts into one single loan, ideally with a much better APR. They mention rates starting as low as 6.40% APR.
Wow, that's a big difference from 25 or 30%.
Huge difference. So you end up with one monthly payment, which is easier to manage. And because the interest rate is lower, more of your payment goes towards the principal.
Meaning you could potentially pay off the debt faster and pay less overall interest in the long run.
That's the goal. Simplify things and lower the cost of borrowing.
And checking options through a MOAN, does that hurt your credit score? Like applying for loans usually does?
Good question. They specifically say that just comparing loan options through their service doesn't negatively impact your credit score. It's usually only when you actually proceed with the loan application that hard inquiry might happen.
Okay. And they have a good reputation.
They mention an A+ rating with the Better Business Bureau, which is generally a good sign.
And the process to see options is quick.
Apparently, yeah, like an initial 10-question form. They don't even ask for your social security number right away, though they do need a real phone number.
Gotcha. Okay, so that's tackling existing high-interest debt.
Correct.
What about using credit cards more strategically? Maybe taking advantage of offers.
Yes, absolutely. Leveraging 0% introductory APR offers can be a smart move if you're disciplined about it.
Right. Like the Chase Freedom Unlimited card mentioned in the sources.
Exactly. That one offers a 0% intro APR for 15 months, and that applies to both new purchases and balance transfers.
Okay, so that 15-month window, you could make a big purchase and pay it off over time without any interest.
Correct. Or you could transfer balances from those high-interest cards we were just talking about.
Ah, right. Move the debt to the 0% card.
Yep. And then you have 15 months to attack that principal balance without any interest charges piling up.
But, and this is the crucial part, right? Okay. You have to pay it off or at least make a serious dent within those 15 months.
Absolutely critical, because once that intro period ends, the regular variable APR kicks in. And for that card, it's listed as 18.99% to 28.49%. So you need a solid plan.
Right. Don't just transfer the balance and forget about it.
Definitely not.
Yeah.
But if you manage it well, it's essentially an interest-free loan for that period.
And that particular Chase card also has rewards, doesn't it?
It does. Pretty good ones, actually. 5% cash back on travel booked through their Chase travel portal, 3% at restaurants and drugstores, and then 1.5% on everything else.
Plus the sign-up bonus.
Yeah, a $250 bonus if you spend $500 in the first 3 months. And importantly, no annual fee.
No annual fee is always nice, so it doesn't cost you just to have the card.
Exactly. And the rewards don't expire. You can redeem them anytime. So it combines that 0% intro offer with ongoing reward potential.
Okay, that seems like a potentially useful tool if used responsibly.
Yeah.
Let's shift gears again. We talked about watching videos for money.
Oh?
What about just like sharing your opinion?
Yeah, another way to potentially earn a bit extra. Turns out lots of companies really want to know what consumers think.
And they'll pay for it.
They will. That's the whole idea behind survey sites like Branded Surveys. Businesses use consumer feedback for product development, marketing strategies, all sorts of things.
So you sign up, take surveys, and get paid?
Pretty much.
Yeah.
They estimate you could earn up to maybe $140 a month, something like $5 per survey on average, though it varies.
Okay. Again, not life-changing, but could be useful pocket money if you've got some spare time.
Exactly. Maybe waiting for an appointment, on your lunch break, that kind of thing. The surveys are usually fairly short, like 5 to 15 minutes. They usually tell you the estimated time up front.
And getting the money out is easy.
Seems pretty straightforward.
Right.
They have a low cash out threshold, just $5. And you can get paid via PayPal, direct bank transfer, gift cards, Amazon, lots of options.
And they have a decent reputation, too.
Yeah, rated excellent on Trustpilot.
Mm-hmm.
And right now, they're offering a 100-point welcome bonus just for signing up. Again, low commitment to just try it.
Interesting. Okay, what about the money we already have, like our savings? Are we maybe missing out there, too?
Very possibly. This is a big one that often gets overlooked. Where are you keeping your emergency fund or your general savings?
Probably. Just in a regular savings account at my main bank.
Right. And the interest rate on those is usually, well, pretty low. Tiny, often.
Yeah, basically nothing.
Exactly. This is where high-yield savings accounts come in. The sources mention Wealthfront as an example.
Okay, what's different about them?
They offer a much higher interest rate, or APY annual percentage yield. Wealthfront, through their partner banks, is currently offering 4.000% APY.
4.00% compared to like 0.1% at a traditional bank.
Right, it's a massive difference. That APY is the actual return you earn over a year,
Right.
with compounding interest included.
Wow. So your savings actually grow a bit.
Significantly more than they would otherwise, yes.
Mm.
And with Wealthfront, they highlight things like no account fees, no minimum balance needed to earn that 4.00% APY.
And you can still access your money easily. It's not locked away.
Nope.
Yeah.
Unlimited transfers, even same-day withdrawals are possible, so it maintains flexibility.
Plus, it works with payment apps like Venmo or Cash App.
Yeah, they mentioned compatibility there too, which adds convenience.
And there's a bonus offer.
Currently, yes, a $30 bonus if you deposit $500 to start. So it's an extra little nudge to maybe move your savings somewhere that can actually work a bit harder for you.
Okay, that definitely seems worth looking into. Keeping with the survey theme, but maybe a bit more specific. What about surveys on, like, news and politics?
Yeah, that's another niche. If you're someone who follows current events anyway.
Might as well get paid for your opinions on it.
Kind of, yeah. YouGov is a platform mentioned for this. They pay users for taking anonymous surveys about news, politics, the economy, that sort of thing.
Anonymous is probably good for political topics.
Definitely. And they suggest potential earnings of up to $100 or maybe more per month, again, depending on how many surveys you qualify for and complete.
And how do they pay? Points again.
Yeah, you earn points for surveys, and then you can redeem those points for cash or gift cards. Pretty standard system.
Any special offers there?
They mentioned a bonus specifically for Penny Hoarder readers, 500 points for signing up, and another 1,000 after you finish your first survey.
Gotcha. Okay, one last area that can be a real money drain if you're not careful. Online shopping. Especially impulse buys on places like Amazon.
Oh, yeah. The convenience is amazing,
Mm.
but dangerous for the wallet, right? That one-click buy.
So easy, but sometimes you click it without checking if you could get the same thing cheaper somewhere else.
Exactly. Or maybe there's a coupon code you missed.
Right. So how do you avoid that without spending ages comparison shopping for every little thing?
This is where free browser extensions can be really helpful.
Like add-ons for Chrome or Firefox?
Exactly. You install them, and then when you're looking at a product, say on Amazon, they automatically work in the background.
What do?
They check other major retailers' websites to see if they have the exact same item for a lower price. Some also automatically search for and apply any available coupon codes right at checkout.
Whoa, automatically, so you don't have to hunt for codes yourself.
Nope, it does the legwork for you, finds the code, tests it, applies the best one.
That sounds incredibly useful. Does it actually save much?
Apparently, yes. The collective savings mentioned are huge. Something like $800 million saved by users in the last year alone using these kinds of tools.
$800 million. Wow. Okay.
It's like having a little shopping assistant automatically finding discounts for you.
So, okay, wrapping this up. We've covered quite a bit of ground here.
Yeah, quite a few different areas where money might be leaking out unnecessarily or where there are chances to bring a little extra in.
It really seems like making these smaller, maybe less obvious adjustments and just being aware of these services and tools, it can add up to a real difference over time, can it?
Absolutely. It's often not about massive drastic changes, but about optimizing these recurring things.
We hit on car insurance comparisons.
Getting help with managing significant debt.
Earning a bit from things like surveys or watching videos.
Tackling high credit card interest, maybe with consolidation or a 0% APR card.
Making sure your savings are actually earning decent interest.
And being smarter with online shopping, using those browser tools.
The big takeaway feels like just being aware of these potential blind spots is maybe the most important first step.
Definitely. recognizing where the leaks might be or where the opportunities are, then you can actually do something about them.
Right. Exploring these practical solutions we talked about, it puts you more in control.
So maybe the thing to think about after listening is which of these dumb expenses or missed opportunities might be affecting you personally.
Yeah, and maybe just pick one or two of the solutions that sounded interesting or relevant.
Exactly. And just explore that one thing further. Could be checking your insurance rate, looking into a high yield account, trying a survey site.
Just taking one small step to get a bit more control over your financial picture.
Yeah. It could actually make a bigger difference than you think.